Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 29th of October. I'm Daniel Lam, your host for the podcast. My chess trainer and I were reviewing my recent games, in one of which I missed a very obvious threat. So he said to me, even if I were to die, I must prevent that obvious threat first, and then I'm allowed to die. Well, I do not believe an ordinary chess player could take that kind of advice, but he knew that I could. And he was right. It did stick in my mind. Well, as strategists, we always strive to make sure our advice resonates in our clients' minds. As such, it is always tricky to illustrate the risk to clients in high-flying sectors. But the global semiconductor sector could see volatility ahead in the near term. Yesterday, we spoke about how the unwind of the dollar-yen carry trade can lead to short covering in the yen, and investors would be forced to sell the risky assets financed by short yen positions, such as the US growth stocks. We also spoke about the positioning of various sectors and concluded that there could be broadening out of sectors beyond the mega-cap growth stocks. Fundamentally, growth in the global semiconductor sector appears uneven in the near term. Now, several large companies in the sector have reported their Q3 earnings, and they show strong demand for advanced semiconductor chips. Outlook for the most advanced chips is positive as capacity remains constrained due to strong AI-driven demand. But having said that, demand recovery in the automotive, mobile, and PC markets, which use less advanced chips, has been slower than expected. There is high inventory levels in these industries that could dampen and delay the cyclical recovery. Furthermore, sales to China remain subject to uncertainties and likely great restrictions due to geopolitical concerns. China accounts for a significant 21% of revenue for the Philadelphia Semiconductor Index. A Republican clean sweep would be negative for semiconductors, while a Democrat clean sweep could result in increased regulations in the technology sector. However, on balance, we expect the structural AI demand to be supportive of the global semiconductor sector. The cyclical recovery should still come through with a soft landing expected in the US economy. Much of the structural AI demand is underpinned by strong cash flows from big technology companies. So therefore, we continue to be overweight the US technology sector for the structural growth it offers. The upcoming earnings results and guidance could affirm the positive outlook in the key stocks in the semiconductor sector. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.